Look at a map of the global economy. You see highways, shipping lanes, fiber optic cables, arteries of legitimate trade. But there is a second map. A hidden cartography. It flows beneath the pavements, through encrypted signals, and across borders that exist only in light. We call it the black market, the underground, the shadow economy. As if it were a mere blemish on the face of capitalism. What if it's not a bug? What if it's the operating system? The global financial system runs on a paradox. Central banks fear deflation and hoarding, yet the world's most stable currency, the US dollar, is primarily circulated not through trade surpluses, but through shadow transactions. There are more physical $100 bills in circulation today than ever before. Most of them are not in your wallet. They are in Moscow safehouses, Tehran exchange shops, and the armored walls of South American cartels. This isn't a leak in the system, it's a reservoir. These underground economies provide a massive, unacknowledged subsidy to sovereign liquidity. When a cartel buys $1 million supercar, or a corrupt official hides cash under a mattress, they are functionally buying U.S. Treasury bonds without a middleman. They are holding American debt, interest-free. To understand the symbiosis, you must follow the laundromat. Not the back-alley cash business, but the high-end integration of illicit capital into prime assets. If you wiped out all dirty money tomorrow, the luxury real estate markets of London, New York, and Dubai would collapse overnight. The art market, a $60 billion a year industry, would cease to function as a store of value, reverting back to mere paint on canvas. This is the Narcissus layer of the shadow economy. Legitimate banks don't just tolerate this flow, they rely on the inflated collateral values these anonymous cash purchases create. They use these overvalued apartments as security for more lending. The ghost money guarantees the real money. Critics call cryptocurrency a tool for criminals. This is a misreading. Cryptocurrency, specifically stablecoins, is the new vascular system of the shadow economy. It's the frictionless grease between the cracks of the old banking system. When a factory in China wants to bypass capital controls, or a syndicate in Eastern Europe needs to pay a supplier in the Middle East, they don't send a wire transfer that's traceable. They use a digital bearer instrument. The Tether network, often criticized for its opacity, is effectively a parallel Federal Reserve for unbanked, and debanked, global trade. It absorbs billions in demand, sterilizing the volatility that would otherwise leak into the official consumer price index. In the legitimate economy, the cost of money is set by Jerome Powell or Christine Lagarde. In the shadow economy, the cost of money is set by risk, violence, and seizure probability. Here, interest rates are astronomically high. But here's the trick: the high interest rates of the black market subsidize the low interest rates of ours. Pension funds and banks cannot legally lend to a street vendor, without a credit score in a developing nation, or to a startup with a gray business model. The shadow economy provides that seed capital. It funds the slum, which eventually becomes the suburb. The returns from that illicit lending are eventually washed, taxed, and deposited right back into the Wall Street machine. The global economy runs on a dual-track interest system. One visible, one invisible. Perhaps the most audacious marriage between the light and the dark is the sanctions economy. When the United States expels a nation from the dollar system, it creates a splinter economy. A shadow fleet of tankers with turned-off transponders, barter trade in gold bullion, and hawala networks. However, sanctions enforcement is not about stopping trade. It's about making trade inefficient. This inefficiency drives the black market price of the dollar higher for the sanctioned state, not lower. A dollar bill in Tehran or Caracas is worth more than in Texas. This premium strengthens the dollar's global chokehold. The shadow economy acts as a pressure release valve that prevents a complete breakdown into a bipolar currency war. It keeps the enemies of the system still using the currency of the system. Strip away the drugs and the arms. The bulk of the black market isn't criminal, it's informal. Street food, unregistered babysitters, cash-in-hand construction. The International Labour Organization estimates that nearly 60% of the global workforce operates in this shadow. These aren't parasites. They are the foundation. If you formalized the entire shadow economy of India, Nigeria, or Brazil overnight, you would create an unemployment crisis that would make the Great Depression look like a minor hiccup. Governments tolerate, and even depend on the shadow economy, because it is the ultimate social safety net. It absorbs unskilled labor that the legitimate corporate structure has no use for. It is the silent, off-the-books jobs program of the world. The shadow economy is not an enemy of the state. It is the reactor core of the state. It provides the liquidity when the faucets run dry. It provides the jobs when the corporations won't. And it provides the price discovery, for risk that the central planners refuse to acknowledge. To call it a black market is a misnomer. It is simply the market. The unregulated, primal market that existed before borders, and will likely exist after them. As long as there is tax, there will be evasion. As long as there is prohibition, there will be demand. The financial system doesn't survive in spite of the shadows. It survives because of them. This was more than a documentary. This was a look behind the curtain. For deeper analysis on the mechanics of power, finance, and the systems we live inside, subscribe now.
Subscribe, because the next story might shock you even more.